Hello and welcome to episode 376 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Leaks. Damien, welcome back. How are you doing?
I'm great, Andy, actually, because one of the reasons being we're having this hot weather spell, but I've been sheltering in the Money to Masses Towers all week that actually has aircon, so I feel relatively chilled compared to probably most of the people in the UK. But I'm not going to rub it into people's faces at all, but I am feeling pretty relaxed. And the other thing that's really positive is you're going to read out a review, aren't you, which we received from a long-time listener, actually, an 80/20 investor member who sent it in via email and also left it on iTunes, which really did make my week. So we get these reviews every now and then. We've shared a few recently, but when people take the time to leave a review like the one you're about to read out, it really does give me a massive boost.
Yeah, and so as you say, this is from long-time listener and 80/20 subscriber Ernesto, and he goes on to say, it may sound like an exaggeration, but honestly, I have to say, Money to the Masses has changed my life, and believe me, that's not an overstatement. My future is radically different now as a result of listening to this podcast, and today is exactly 2 years since I discovered Money to the Masses, and although I always thought it was really good, I suspected, like many other podcasts, at some point it would run out of steam. But no, every week a new topic or lesson comes out, and after listening to around 250 episodes, I can say that this podcast never stops giving. Now, Ernesto went on to write another 2 or 3 paragraphs, which was a little bit too long for this podcast, but believe me, it was great to hear, and we shared it amongst the team, so thanks ever so much for that. If you want to leave a glowing review, please do so. Pop on your podcast app of choice or send us an email, Damien at Money to the Masses or Andy at Money to the Masses. It's always welcome to receive it. So Damien, that gave us a bit of a spring in a step on Monday this week.
It did, and if you want to go and read Ernesto's full review, you can do that if you go onto iTunes, because he also put it on there publicly. So that was fantastic, and you have to realise if you leave a review, then not only may you get a mug, as Ernesto will now be receiving, but it really does give the team a boost, because this is why we do this podcast, to try and help people and to listen to all those podcast episodes over that period of time, and people to say it's really impacted them is a real motivation for us. So thank you, Ernesto, for leaving that review, and if you do want to leave a review, then please do so, because it does help us as a show and give us a real buzz. And it is nice for people to appreciate how difficult it is to keep trying to make these podcasts not only evergreen, but also coming up with new fresh content every week. So that's much appreciated. So on that note, I am going to tell you what is on the podcast this week. So there are 3 pieces, same format as ever. The one piece I'm going to do is on investing, and it's about how you research alternative funds. So you may see a fund that you like. It might be in a press piece. It might be on a particular piece of research that you have read, but you might not be able to buy it on the platform of choice that you use. How do you go about finding one that's like that fund? And the reason this came about is because it was a question that came via 80/20 Investor, which is something that came via 80/20 Investor this week. So I actually explained to people how I go about finding such funds and such alternatives. So I thought, well, if multiple people are asking, then it's worth being on the pod. The other piece I want to do is I want to talk about something called ghost brokers. It is a new scam that we're seeing online, particularly social media platforms, that will impact quite a few people. In fact, the number of people being impacted is quite alarming. It's probably only the tip of the iceberg. So I want to explain what ghost brokers are, and it's in relation to things like car insurance and how to avoid becoming a victim. And the other piece I want to talk about is a technique for trying to test and learn and review your budget and curbing spending. So we often talk about building budgets when we're trying to control our money, especially in a current cost of living crisis. We've done a focus on that at parts on our Instagram, and we did our 28-day challenge earlier in the year. But what about when you get to the review stage? You've built those budgets. How do you successfully start to review them? Because it's not always easy to stick to that spending plan that you've created. So I want to give people a tip on how they can do that.
Okay, so let's start with the main investing piece then. And we're talking about funds and how to find those, particularly if you're maybe with a platform that has a restricted number of funds, how to research and find similar funds that are out there elsewhere.
Yeah, so this came about, as I mentioned earlier, because of 80/20 Investor. And I got asked a question because there was a fund within the portfolio that I run with my own money. And I put it on the site live so people can see the funds I hold. And I've been running this for more than 7 years now. It's nearly 7.5 2.5 years, and the portfolio has been performing very well, and I'm really pleased with that performance. And the whole point is I'm trying to teach people how to use the research that's on 80/20 Investor and now how to manage their own portfolio and be able to weather the various storms out there and grow their wealth over time. Now, what came to light is one of the funds that I hold in my portfolio isn't available on Hargreaves Lansdown, for example. And so it started to raise a question about how would you go and find an alternative if you like the look of a fund. So in this example, there was a fund that wasn't available on Hargreaves Lansdown, but you could buy it, for example, on Fidelity. Now, this happens regularly, that you get two platforms and they have different funds on their list. There will be quite a bit of overlap, but it could be they don't have the ETF that you want, the investment trust, the unit trust. And so how do you go about finding alternatives? Now, why this might become a problem, it's not just because you might be looking at what's in my portfolio, but it might be that you see an article in the Sunday press that they talk about a fund, or it may be that you've seen another piece of research or journalism that might highlight funds that are worth looking at and you might find it interesting. So to give you another example, you may use a platform's shortlist or best buy list. It might not be a platform that you invest with, and they may highlight a fund and you think that looks interesting, I want to invest in that. But then when you go to your own platform of choice, that fund may not be available. So how do you find similar funds? And so I started to explain to people within the chatterbox area of 80/20 Investor, which is like a forum effectively that's behind the paywall. And in there, I explained how I would go about finding an alternative. So there was a fund which I'm going to call Fund A. That was one that I like the look of. But if my platform of choice doesn't have that particular fund, and I'm going to just use Fidelity and Hargreaves Lansdown as an example. It's not a reflection on who has the best selection, but it just makes the example I'm going to give a little bit easier to follow. So let's say there is a Fund A that's available on Fidelity, but it's not available on Hargreaves Lansdown, but I invest via Hargreaves Lansdown. Let's assume that. And so I can't have that fund. So I'm then stuck. Well, which do I pick? Now, what you can do is you want to go and look for something that's highly correlated to the fund that you wanted. And that means that when a fund goes up and down, they almost move in lockstep. So when one goes up, the other goes up by almost identical amount. Then you know that the fund is highly correlated and therefore is effectively investing in similar or very similar underlying holdings. The problem you have with fund platforms is their screening and their tools aren't that granular. They don't x-ray to a depth of where you could say, I want a fund like A, find me an alternative. They don't go and allow you to screen by what the fund holds, not very often anyway. So you might want to try and find other free research sites. I've never found one that can do these things to the detail that you would want in this scenario. So what I do, or what I would suggest, is that go and find the fund that they like. So Fund A, that's maybe on Fidelity. Now, you won't necessarily be able to find that fund on Hargreaves, like I've said, but therefore you won't be able to research that fund on Hargreaves because it won't even be on their platform at all because you can't buy it. So go and note the performance numbers of the fund that you're after. So go on the Fidelity website. You'll be able to look. You don't have to be investing on that platform. You'll be able to see the fact sheet that's for that fund, and you'll be able to note, let's say, the 1 month, 3 month, 6 month, 1 year, 5 year, 3 year performance numbers. Then what you need to do is you then need to go across to Hargreaves Lansdown. You go and find the sector that ETF, that investment trust, or that unit trust resides in, and you will be able to screen the list of funds available on your platform. So I'll say Hargreaves Lansdown in this example, and you'll be able to screen down the thousands of options to just the funds within the same sector as Fund A that you really wanted to buy but can't. Then when you've done that, you then start to rank the table that you've got there by the performance figures. So you might rank it by maybe the 3 month performance number. And what you're looking for is you're trying to find, therefore, the fund that's got a 3 month performance figure that is really, really close to Fund A that you're unable to buy on your platform. Then when you get a short list of ones that are fairly near to it, you then start looking at the other performance numbers. You look at the 1 month, the 6 month, the 1 year, and you go and look and see which fund almost mirrors those performance numbers as closely as possible. And what will happen very quickly is you will get down to a short list of only maybe 1 or 2 funds that therefore look like they have performed similarly to the fund that you wanted, Fund A. Then this is where it gets interesting. You then need to go and chart the funds on your shortlist against Fund A. And what that will mean is you will probably have to go back to Fidelity, because they're the platform with the fund that you wanted on it, and go and look at the fund and then look at the performance tab of that fund. And you will find there's an interactive tool there which you can then start charting funds against. And if you get your shortlist that you may have developed on the platform of choice, like my example, Hargreaves Lansdown, you find the ones that will probably be on Fidelity as well. And then you start to chart the performance of Fund A against the ones you've got on your shortlist. And then what you will see is very quickly how their performance, not just over those discrete 1 month, 3 month periods that I mentioned, or 1 year period, but how it actually has performed over time. And you can then draw charts with the lines on, going up and down, the squiggly performance lines, going back over 1 month, 3 months, 6 months, 1 year, 2 years, 5 years. And if a fund is highly correlated, and when I'm saying a correlation, it's like 0.99, for example, out of a scale of -1 to 1 being absolute perfection. They actually are pretty much the same thing. They're moving in lockstep. You will find a fund that will probably be moving very closely, almost identically to the fund that you had wanted. And then you can be pretty sure that the underlying holdings of that fund, the things that might drive it in the market, impact it, are almost identical. And then you could go back to your platform, Hargreaves Lansdown in my example, and then buy the fund that you wanted that's going to probably closely mirror the Fund A that you couldn't buy. The performance won't be identical, but it will be it'll be very, very close. So you don't have to therefore look at comparing the fact sheets of hundreds of different funds. You don't have to go in and look at the individual performance figures and try and work out which is going to be most similar. You can then visually just see it, and it makes the research very, very quick. But one thing I would remind people is you then need to look at the charges on the different funds, because some funds will have bid offer spreads. So that is where the price you buy and sell at is a slight differential. In short, it works like an initial charge on a fund, and some funds may have that. So you want to make sure that there isn't that on the fund, because the one you're buying doesn't have an initial charge, yet the one that you end up buying has a 3-4% charge basically for investing in it. It's unusual, but it does occur. Then you won't want to necessarily pick that one. You want to pick one of the other alternatives that you may have identified that doesn't have the charges. So that is a very quick roundup of how you can quickly get a shortlist, find a fund that's a viable alternative to an ETF, investment trust, or a unit trust that you may want. But you can then dig deeper. You can then look at the fact sheet. You can look at their performance figures over time much more closely. And then you can draw comparisons and make a decision whether you think that's a viable alternative. And you can do that quickly rather than trawling through hundreds and hundreds of funds. And what would happen in that instance is you just give up.
So that's all interesting stuff. One question I do have on that though, Damien, is when you've done your charting and you've come up with your shortlist of, say, just a few funds that you need to then chart, in your example, back over on Fidelity, let's say you were using Hargreaves. What about if the ones that you had found were then not subsequently on Fidelity, so you couldn't chart them, i.e. each one was on different platforms, so you couldn't compare?
It's a really good question. And the way you get around that is that most platforms will allow you to use their charting tools without you even registering, because it's a research tool and they want to try and attract new customers. So you can go on there and just play around. So the answer would be to go and find other platforms that have charting tools, because most have some kind of charting tool, or allow you to compare performance across funds. And you will find that probably one of the platforms will have most of the funds or more of the funds, and you might have to use multiple platforms. There are some research sites, things like TrustNet, that have certain tools and things on there which you can also have a look at, Morningstar, and see if there are tools on there that allow you to chart funds. But sometimes the platforms are a little bit easier to use than some of those research platforms. But you look at something like Morningstar, look at something like TrustNet, or go and look at multiple platforms. All you're trying to do to see is there a highly correlated alternative?
Okay, moving on next to ghost brokers. This has come up and been highlighted on social media. There's a bit of an issue with these ghost brokers. You're going to explain what they are and what people can do to avoid getting caught out.
Yeah, so before I start this one, because it relates to Instagram, things like TikTok, social media platforms where people are pulling off scams, I just wanted to highlight something to people, is that we became aware, or actually Rihanna, who did work experience and starred on last week's podcast, found a fraudulent account of Money to the Masses on Instagram. So what somebody had done is they'd taken our posts and completely replicated our account on Instagram, so it looked identical. They even managed to create a load of followers, so they had about 15,000 followers on their Instagram account in less than 24 hours, and they were mimicking us. And they were clearly going to use that inevitably, because this is how this kind of fraud will normally work, is they would then go around Instagram commenting as if they were for money to the masses, or they would start posting about high risk investments or try some kind of scam on people who started following that account thinking it was money to the masses. So the message is obviously be vigilant, but if you see any accounts like that, then please make sure you report them. And we did, and a whole bunch of other people did who followed us on Instagram. We asked people to report these accounts, and they did, and it eventually got taken down. But the reason I mention it is because inevitably we are going to probably see more and more of this kind of stuff, because people do try and pass off as other entities to try and scam people. It's a shame we can't stop it, but if you do see it, please do make us aware and report it, because there were a number of you who got in touch to actually highlight it as well. It wasn't just Rihanna who saw it. So that's my first thing. But the wild west of social media platforms is where we're seeing a lot of these ghost brokers. Now, what they are is they're typically where an account poses as a middleman for an insurance company, and they claim to be able to get you cheap car insurance policies, for example, but people are ultimately left with either fake or non-existent policies, or ones where details are incorrect. And what's most worrying about that is that people who are using these accounts, I'm going to go and explain how they actually work and what the scam is, but you can be left uninsured, and you can also lose money to the scams. And don't forget that if you are driving without insurance, then there is potentially a fixed £300 penalty that can be given to you, and 6 points on your license. And not only that, it can be referred to court as well, ultimately, where there is no limit on the fine that you can get, and you can be permanently disqualified from driving. So that's the first warning. But how do these ghost brokers work? Well, what they tend to do is they tend to advertise on things like student websites, on WhatsApp, or social media like Instagram, like Facebook, and like TikTok. Now, which the Consumer magazine did some analysis, and they found that if you searched cheap car insurance on Instagram, then you would find a whole bunch of profiles, and of the 47 they found, 25 of them, so more than half of them, were not authorised by the FCA, so the Financial Conduct Authority. And what they would be promising, an example could be up to 50% off the premiums on your car insurance, and they would have some kind of no claims bonus scheme built in, and they would offer things like speeding ticket removals. And these accounts weren't small. They had 46,000 followers in one example that they ultimately got closed down. And what happens is people were searching on social media platforms for cheap car insurance, coming across these accounts that promise to be able to cut their premiums by half on their car insurance. That's very attractive. So people then engage with these services. And what happens in the background, it could be that the ghost broker, so the middleman, will sell you a policy, but then subsequently, when you don't know, they will cancel that policy. So they've taken your premiums and you don't actually have any insurance because they've cancelled it and they haven't told you. So they've just basically taken your money and run. The other thing that they will do potentially is they will change details on the insurance policy to make it cheaper. So they might change the driver details, or they may change the address of the policy without you knowing. So that brings down your premiums, because it isn't the correct details on the policy that should be on there if you were to apply yourself. So your correct driving offences, your correct name and address, and all these things impact the ultimate price that you pay on insurance. So you would be left unable to claim because you actually got a policy that's taken out fraudulently, and you will be uninsured. Now, there is a side thing to this. If people listen to this thinking, oh, well, I'm not going to search for cheap car insurance on Instagram or social media. But if you ever receive a car insurance document or something like that out of the blue at your address that isn't for you, then do call the insurer. Don't just chuck it in the bin, because it could be your address is being used as part of one of these scams. So they're just using your address and postcode to be able to drive down the insurance premiums on a policy that they're fraudulently selling to somebody. So if you receive that, make sure you dig a bit deeper. Now, this isn't a small problem. Action Fraud have said there were 517 cases of ghost ghost brokers conning people in 2021, where there were total losses of £1 million. And according to the Insurance Fraud Bureau, last year they were collectively reported more than 21,000 policies that could be connected with this scam. And don't forget, most people who are victims of scam won't necessarily come forward because of embarrassment. So it is a significant issue. To avoid being a victim, in the first instance, don't go searching cheap car insurance on social media platforms. But as I mentioned, they are posting on other alternative websites and on things like WhatsApp. So if you do come across a broker, then do check that they are authorized by the FCA. Don't just take their word for it. Go in and check on the FCA's website, where you can check companies' authorization status to make sure they are genuine. Also, do be wary where there's no or very few contact details on any of these profiles or anywhere where you're trying to buy car insurance, because it means you're going to find it very difficult to contact them if there is a problem. And also be wary if you're buying things and it seems too good to be true. It normally is. And so if you can't see any explainer of how people are providing you with this really cheap car insurance, then that should set your alarm bells ringing. So do be aware of ghost brokers, be vigilant, and in the cost of living crisis, that is why this type of scam is gaining more and more traction, because people are trying to cut their bills and therefore being attracted to these promises online of incredibly cheap policies.
So let's move on to the final piece then about budgeting and how to review your budgets, test and learn. Damien, you're going to explain.
Yeah, so we did a 28-day challenge at the start of the year. And if you go on our Instagram profile, it's actually under the Fix It and Grow It campaign. So if you look at Fix It and Grow It, you'll see a highlight. And we walked people through how to fix their finances and how to improve them. And part of that, we also told people how they could budget effectively. And we'll put a link in the show notes. We have our very own budget spreadsheet, which you can download. It has links to show you how to manage your money, how to get the best out of your money, reduce bills, and how to split your money up. So in terms of wants, needs, and saving money and clearing debt. So that is incredibly useful, and it's something that I've used personally. Now, just to give you a quick summary, what typically happens, we help you to budget. You would also, in parallel, you might download a budgeting app, so something like Money Dashboard or Emma, or if you use something like Starling Bank, there's a lot of analysis that they provide on your spending. And one of the things that they're really good at, these apps, are quantifying what you're doing with your money. If you can't quantify it, you can't control it. So you control your spending. You'll be able to see very quickly where your money is going, because whenever you spend money, these apps will categorize your spending into different areas. So it could be, for example, spending on groceries. It could be on going out, eating out, and it puts it into buckets. And so you can see where your money is going. Now, once you can quantify it, you can then start to control it. And using that budgeting spreadsheet that I mentioned, we show you how you can cut bills. They are your things that you have to have, how you can cut the things you don't need, your wants, so your discretionary spending, and we give tips. And more importantly, we start to help you build budgets. And those budgeting apps are very good at that. So going forward, you don't have to do as much work. All the heavy lifting is done for you. So for example, every day I must open my budgeting app multiple times just to see as transactions go through on my credit card and bank account, they drop into the relevant categories where I've got specified budgets and I can see that I'm within my budgets. That even goes down to petrol, how much I spend a month on petrol, and I can therefore start to change behaviours. Now, the thing is, you build a budget and then you need to review it over time. And we often don't focus enough on how do you actually review that budget, because one of the problems you have is you've started to reduce your bills and you've got to the point where you feel you've optimized and cut back all you can, but then you need to start cutting back on other areas, because obviously money is tight. There is a cost of living crisis, and sometimes you don't always manage to stick to your budget. So what can you do to try and make headway, not just become disheartened? Well, one of the things is you review your budget, and then by looking at the spending patterns that you've got, the budgeting apps will tell you, you can see you maybe have spent more money than you wanted to on, let's say, for example, petrol. So you need to increase that budget, or you need to take action. And only by reviewing at the end of the month to see where you've not managed to keep to your individual budget. So for example, like I said, it might be the amount you spend on fuel, then you might not have any more money to go towards that budget. So you've got to do something. And it's important that what you do is that you set up one goal. So that one goal, and you keep everything else the same, is your aim for the following month. So it may be, in my example, that I might decide that, do you know what? I'm going to use the car 2 days less a week. So that will mean that I would be hopefully using less petrol, which will help me get within budget or get towards being in budget. Now, that is a very specific goal. And the reason I call it test and learn is because when we're on the website this week, we make changes to the website to make it more user friendly. And we have to do that. We make a change, we test, did it work, did it not? And then we learn from that. The problem is if you've always got moving parts and you're never reflecting on a situation, then you never learn from it. So in my example, if I then started driving fewer days a week, then next month we might see that I actually go within budget. It may be people who are having takeaways might decide, you know what, we're going to have one less takeaway a week. We're going to try that for the next month. Or you might decide you're not going to buy lunch at work as many days a week. You're going to start taking lunch in 2-3 days a week. And by making that one goal, sticking to it, it means you then review your budgets. You'll be able to more likely succeed in future rather than become disheartened. And then realistically, if you have to change things, then you will have to review it again and see, are you being too hopeful with your spending plan and your budget? But if you do this consistently, I can almost guarantee you, because this is what I've done over time, is that you are more likely to be able to achieve your budgeting. And by focusing on one thing, it increases your chance of success. And the other thing, as a family or as a couple, if you've got joint finances, it's far easier to say to people, rather than going, oh, we need to spend less money, is that we're going to have one less takeaway a week, because you can materially see what's going to be the impact. If you're having 3 takeaways a week and you're going down to 2, then you're going to save a third of your money that you're spending on takeaways. And that is a far easier thing to get people on board with. So the message is, make sure that you're constantly reviewing your budgeting apps or spreadsheets throughout the month, anticipating future spending so you can try and stick within that budget. But at the end of the month, set a new goal for the following month, one task, stick to it, achieve it, rinse and repeat month after month with a new goal, and your chances of a success are much higher. And it's how I've done it over the years, but I've just never actually talked about it until I realized the other day that we do need to talk about how you do the reviewing part of budgeting and not just focus on setting them up.
Okay, so that's this week's podcast wrapped up. If you want to get in touch with Damien, you can do so in the usual way. It's Damien at moneytothemasses.com. Please do review the podcast if you can. You know how to do that by now. Pop on your podcast app of choice. Follow us in all the usual ways. And so that's it, Damien. We're done, aren't we?
We are. And like Andy said, please do leave a review. And don't forget to join our Facebook group as well as our Instagram channel. So that's facebook.com/groups/money to the masses. We will see lots of conversations going on in there where people are helping each other. So that's it, Andy. Until next time.
Until next time.